Wow, okay, you weren't kidding about wanting a deep dive. This time you've really outdone yourself.
I take it our listener is really interested in this Aditya Birla Fashion and Retail Limited.
That's an understatement. We've got financial reports stacked high over here.
Let's not forget the press releases, and even, if I'm not mistaken, a very slick investor presentation.
All for ABFRL. And they definitely want to know what we think about their second quarter results for fiscal year 25.
So a deep dive it is, and it's a good one to look into, by the way.
Why is that?
ABFRL, they're right in the middle of this massive change happening in India.
You mean how India's economy is growing so fast?
Exactly. More and more households are moving up, becoming aspirers and affluent. It's a whole new level of spending power.
And they're all looking to buy branded stuff, which puts ABFRL in a prime position.
Couldn't have said it better myself.
Well, their FY24 numbers definitely show they're in a good spot. Over 13,996 crore in revenue. That's huge.
No small feat, for sure.
And they're not just some little boutique chain either. We're talking 12 million square feet of retail space.
Across more than 900 cities and towns, no less.
Plus, they've got their fingers in a ton of pies. I mean, look at this. 37,952 multi-brand outlets. It's mind-boggling.
That's how they've built this brand portfolio, though. They're hitting every part of the market.
Okay, so break it down for me. What kind of brands are we talking about here?
Well, for starters, they've got those lifestyle brands. The classics.
Like Louis Philippe.
Exactly. Van Heusen, too. That's for your more, shall we say, established customer.
Got it. So what about those who are maybe a little more budget conscious?
Then you've got your value fashion brands like Pantaloons. They're killing it in that space.
And don't forget Style Up.
Right. But they're not stopping there. They've also got a strong presence in ethnic wear.
Now we're talking. So brands like Sabyasachi, right?
Oh, absolutely. And J-Port, those are major players. But here's where it gets really interesting.
Okay, lay it on me.
They're dipping their toes into super premium and luxury, too.
No way. So we're talking brands like
Galleries Lafayette, for one,
Mm-hmm.
and The Collective, you see.
It's like they want a piece of every fashion pie imaginable.
And they're smart about it. They're targeting different consumer groups with laser focus.
Well, wait, there's more, right? I keep hearing about these digital-first brands they're pushing.
Oh, yeah, that's a whole other ball game. They've got brands like Bewakoof and Wrong.
Sounds like they're going straight for that younger online crowd.
You got it. But here's where it gets even more interesting.
More. What could be more interesting than all this?
They're planning a big split, according to this investor presentation.
Hold on. Splitting the company. Like two separate companies?
Two separate companies, each with its own game plan.
Wow, that's a bold move. So what does that mean for ABFRL?
Well, one of the new companies will be called Aditya Birla Lifestyle Brands Limited, or ABLBL for short.
Catchy. So what's their focus?
They're all about the Western wear powerhouses. Think Louis Philippe, Van Heusen, Alan Solly, and the like.
So they're taking those established big-name brands and making them their own thing. What about the other half of ABFRL?
That's where they're going to focus on those high-growth areas, ethnic wear and those digital brands we talked about.
Interesting. So it's like they're dividing their strengths, creating two specialized teams.
Exactly. Makes you wonder what this means for their overall performance, though.
Well, speaking of performance, let's talk about these Q2 FY25 results. And I'm going to be honest, looking at these numbers.
A little bit of a mixed bag.
Yeah, I'd say so. Their board of directors met on November 7th, 2024 to go over the unaudited financials.
And Price Waterhouse & Co., chartered accountants, they gave it the once-over.
But those numbers themselves.
Standalone net loss after tax, 195.13 crore for the quarter. And consolidated net loss, we're looking at 214.7 crore.
Whoa, hold on. A net loss of over 200 crore. I mean, what's the deal here?
Well, first we got to unpack what these numbers actually mean.
Okay, so standalone versus consolidated, what's the difference?
So the standalone figures, they include the ABFRL Employee Welfare Trust. But the consolidated numbers, they bring in subsidiaries and an associate company too.
So different pieces of the ABFRL puzzle.
You got it. But there's another thing that kind of jumps out at me when I look at this report.
Yeah, I see it too. Both the standalone and the consolidated numbers are impacted by this thing called an exceptional item.
A whopping 98.33 crore, no less.
So this exceptional item, what is it exactly?
It's basically impairment charges.
Impairment charges, as in they had to write down the value of something.
Exactly. Seems like they're restructuring a particular business unit.
So they're taking a hit now to clean things up for the future, like ripping off a Band-Aid.
That's a good way to put it. It stings in the short term, but could lead to a healthier long-term outlook.
Okay, I'm starting to get the picture. But amidst all these losses, surely there must be some areas where ABFRL is doing well, right?
Oh, absolutely. There are some real bright spots when you look at their brand portfolio.
Okay, I'm all ears. Hit me with some good news.
One brand that's really shining is Pantaloons. You know, the one targeting that aspirational Indian middle class.
Pantaloons, yeah, I've heard of them. What's their secret sauce?
Well, their customer loyalty program is a major asset, boasting a cool 16 million members.
16 million. They must be doing something right.
They are, and their average selling price is around 801. It's that perfect mastige sweet spot, you know?
Prestige. What's that mean?
It's like affordable luxury, giving people a taste of high-end fashion without the crazy price tag.
I see.
And their store rollout strategy, it's incredibly efficient. New Pantaloons stores, they actually become profitable within a year.
No kidding. And then what?
And get this, they start generating cash profits within 3 years.
Wow, that's impressive. Talk about a quick turnaround.
Right. Pantaloons, they're definitely a success story within this whole ABFRL saga.
But let's not forget that they're also heavily invested in digital, going after that younger crowd. I mean, e-commerce in India is booming.
They're not just dipping their toes in, they're diving headfirst into the digital world, with 7 digital-first brands already in their portfolio.
7. That's a serious commitment. What's the thinking behind that strategy?
Well, it's a fast-growing segment, for one. Plus, it allows them to operate with what's called an asset-light model.
Asset-light, meaning...
They don't have to invest as much in physical stores and all that infrastructure.
That makes sense. So lower overhead, wider reach, smart move.
Very smart. And they're not just building their own brands either. They're making acquisitions and investments in the digital space.
Acquisitions, you say? Tell me more.
Well, they just increased their stake in Goodview Fashion Private Limited to 51%. Basically made it a subsidiary.
Wow, so they're really going all in on this digital strategy.
Yep, and there's more. They're also looking at a minority investment in Wrong, a popular brand with a lot of potential. Plus, they've got a potential path to acquiring a majority stake in the future.
It's like they're playing chess, strategically positioning themselves to dominate the online fashion scene.
Exactly. They're not just relying on organic growth, they're actively shaping the digital landscape. And don't forget their recent merger with TCNS Clothing Co. Ltd, boosting their ethnic wear portfolio even further.
Wow! So much going on. It's like a whirlwind of activity. We've got this company with a massive and diverse brand portfolio, a major split on the horizon, and a digital strategy that's firing on all cylinders.
And let's not forget those Q2 losses, which, while a bit concerning at first glance, might actually be a sign of strategic restructuring.
Yeah, maybe they're sacrificing short-term gains for long-term success. It's a lot to take in.
It is. So many layers to this story. Maybe we should pause here and unpack some of this in the next part of our deep dive.
Yeah, I think that's a good idea. I need a moment to process all this.
We'll come back and dig deeper into the implications of this demerger and those Q2 losses next time.
Sounds like a plan. Stay tuned, folks, because things are about to get even more interesting.
All right, so we've got this demerger, 2 separate companies.
Right, 2 very different beasts.
Exactly. And that's the point, really. They're creating 2 very different investment stories.
Instead of one big, messy one.
You got it. So you've got ABLBL, those Western wear brands, Louis Philippe and all that.
More established names.
And that represents a certain type of investment.
Safe.
Well, maybe more like stable, value-oriented. They've got a good history of profits, strong cash flow.
High return on capital employed. That's what the investors like to see.
Exactly. So if you're looking for steady dividends, ABLBL might be your thing.
Okay, makes sense. But what about the other ABFRL? What happens to the rest?
Ah, that's where things get exciting. More high growth potential.
Probably higher risk, too, I'm guessing.
You're catching on. Ethnic wear, digital brands, luxury. That's where the fast growth is.
It reminds me of those tech companies that spin off their cloud divisions. Suddenly you've got 2 very different animals.
Perfect analogy. It's like going from a combo meal to ordering a la carte.
Choose your own adventure, depending on your risk appetite.
And your investment goals. But hey, let's not forget the bigger picture here.
The Indian economy. That's got to be a factor.
Right. The whole consumption story in India, you can't ignore that. GDP per capita is rising.
More money in people's pockets.
Exactly. And that means more households moving up the income ladder. Huge potential for ABFRL.
So if you're bullish on India, ABFRL is a good way to play it.
They're a proxy for that whole growth story.
But let's be real, there are always risks. Competition in Indian fashion is intense.
Oh, absolutely. You've got domestic players, international brands coming in, and the online giants. It's a crowded market.
So ABFRL can't just sit back and relax.
No way. They've got to be on top of their game. Product innovation, supply chain, customer engagement, and that digital strategy.
Yeah, they can't afford to mess that up.
The online world is fast-paced. Any misstep, and they'll fall behind. Oh, and speaking of changing landscapes, what about sustainability?
Right. That's a big deal these days.
Consumers are demanding it. They want to know where their clothes come from, how they're made.
Ethical and eco-friendly. That's the name of the game.
And ABFRL, they seem to be getting it. They're talking about reducing their carbon footprint, using sustainable materials.
So they're not just greenwashing.
They've even got a chief sustainability officer. That's a good sign.
Okay, so they're trying. That's good to hear.
It looks like they're actually trying to walk the walk.
So we've got a company in a high-growth market, strong brands, a bold strategy, and they're taking sustainability seriously.
But those Q2 losses are still a concern.
A reminder that there are risks, too. It's that classic high-risk, high-reward scenario.
Exactly. Potential is huge, but they need to execute.
Let's go back to that exceptional item for a second, that impairment charge. Almost 100 crore.
It's a big number, but it's important to understand what it means. They're getting rid of dead weight,
Streamlining.
optimizing their portfolio.
Short-term pain for long-term gain.
It shows they're proactive. They're adapting to the market.
Makes sense. No point holding on to things that are dragging them down.
This restructuring, it might actually be a positive signal for investors. Shows they're thinking long term.
Okay, so just to recap. A company going through a big transformation, splitting into two. High-growth market, intense competition. They're streamlining and embracing sustainability.
It's a wild ride.
But here's the question I have for you. Do all these changes, the demerger, the Q2 loss, does any of that change your view of ABFRL?
That's a good question. What do you think?
Honestly, I need some time to digest all this.
It's a lot.
The process, they're at a crossroads.
The potential is there, but so are the risks. It's a fascinating case study.
And it shows how important it is to look beyond the headlines, really understand the story.
Couldn't agree more.
We've covered a lot, but there's still more to uncover.
Like those Q2 losses, we need to dissect those a bit more.
Yeah, let's dig into those financials and see what else we can find.
Sounds like a plan. Stick with us for part 3. We're going even deeper.
All right, so we've really dug into Aditya Birla Fashion and Retail Limited. We've seen their brands, talked about their big split, those impressive wins with pantaloons, even how they're tackling sustainability.
And yet, those Q2 losses.
They keep coming back to mind.
Yeah, they do, don't they?
So let's get into those financials, really dissect these losses.
Okay, let's break it down further. We talked about that exceptional item, the impairment charge. Almost 100 crore just for restructuring.
Right. But even if we take that out of the equation,
There's still a significant loss from their core operations.
that's not great.
It's not ideal, no. And it raises some questions.
Like, what exactly went wrong?
Exactly. Were there specific brands or segments that underperformed?
Maybe they got hit with rising costs.
Could be. Or maybe a slowdown in consumer spending. It's something investors will want to know.
It's like we're detectives trying to piece it all together.
And don't forget that whole demerger thing.
Oh, right. Could that be playing a role in the losses?
It's definitely possible. Demergers are messy, they cost money, lots of restructuring, separating everything out.
So maybe some of those Q2 losses are just the price of setting up these two new companies.
Could be. Like investing in new equipment or technology. You take a hit up front, but it pays off later.
Makes sense. But investors will want to know if there's a light at the end of the tunnel.
Exactly. They'll want to see a clear path to profitability for both of those new entities. Once the dust settles, will they be stronger? Will this split actually unlock more value?
It's a big gamble for sure. And they're doing all this in the middle of this crazy Indian market. Lots of growth, but lots of challenges too, right?
Oh, absolutely. We talked about the booming middle class, how everyone wants branded stuff, but the competition is intense.
You've got all the local brands fighting for their share.
Plus, the international brands are coming in.
And we can't forget about online retailers. They're changing the game entirely.
It's a tough market to crack. ABFRL can't just rest on their laurels. They have to be smart, innovative.
And let's not forget about the global economy. Inflation is a beast.
Supply chain issues, too, and who knows how consumer spending will shift in the next year.
It's like trying to predict the weather.
It's a lot to manage, but I think it reminds us that investing in a company like ABFRL,
It's not just about looking at the numbers every quarter.
it's about understanding the whole picture, their strategy, how they adapt to challenges.
So after all this, after this deep dive into ABFRL, what's the takeaway for our listener? What should they be thinking about?
Well, we've seen that ABFRL has huge potential, amazing brands, bold moves, and they're in a market that's on fire. But they also have some serious challenges to overcome. Those Q2 losses are a big red flag.
Opportunities and risks. Sounds like a lot of companies these days.
That's the game. ABFRL is at a crossroads. It all comes down to how well they can navigate this crazy landscape, how well they execute their plans, and of course, how they adapt to whatever comes next.
Easier said than done, I'm sure.
Oh, for sure, but that's business. And here's one last thought for you, for everyone listening. The Indian fashion market. It's changing faster than ever. New trends, new consumer preferences, new technology. ABFRL has to be ready for anything. They have to innovate, and they have to stay one step ahead.
Well, it's been quite a journey. We've covered a lot about ABFRL, from their brand portfolio to their financials, their successes, and their challenges.
It's a fascinating company, a real microcosm of what's happening in India right now.
So, to our listener, we hope this deep dive has given you a better understanding of ABFRL. The decision to invest or not is always up to you, but at least now you have the information to make a smart choice.
Always good to be informed.
Absolutely. Thanks for joining us for another deep dive. We'll see you next time. Keep learning, keep exploring, and keep asking those great questions.